Hey guys, Sean Pruitt here, president of Kingdom Exploration. I've got a lot to say about the oil and gas industry, the price of a barrel of crude. There's never been more negative sentiment for the oil and gas industry than what I've been reading, okay? And the biggest reason why oil prices are where they are today now, WTI crude and Brent crude going up again. WTI crude is at $72 a barrel. Brent crude is at $77 a barrel. We hit the floor and then we climb back up. Okay, great news for oil. What we're hearing from the feds that we're looking to cut rates in first quarter of next year. The global economy is better than what they expected. The American economy is better than what they were saying. And so I've got a few, the biggest reason why the price of a barrel of crude has dropped is because of the surprise production coming from America. Everybody thought by now shale would be on the decline, yet we peaked. We hit 13.2 million barrels a day. And I could explain that. Now, there's a lot of great information out there, but it's buried, okay? And I've read a lot of articles. I've watched hours and hours of analysts communicating and speaking about what's happening in the industry. And there was three great interviews: Eric Nuttall, Art Berman, and then also Jim Cramer. And I'm going to go over. And I wrote a lot of notes, and in between the three of them, it's 3 or 4 hours, okay? And it's not easily found, okay? And I wrote a summary that I'm just going to read now. Shale oil, despite its significant contribution to recent oil production growth, is grappling with inherent limitations, notably the rapid depletion rates of shale wells. Newer wells in regions like the Permian Basin are producing less over their lifetimes compared to earlier wells. Now, this information that I'm reading, it's a summary of what Art Berman, who's an intelligent geologist that many people bring on the show because of his ability to futurely predict what's going to happen to shale. Eric Nuttall is another one, and also Jim Cramer. So indicating diminishing returns, okay? This trend, underscored by a decline in average well productivity, poses a challenge to the sustainability of shale oil as a reliable source. Concurrently, global oil demand remains robust, particularly in transportation fuels, countering narratives of a significant demand drop. Looking forward, the oil industry faces a complex future. The combination of declining shale oil productivity, steady global demand, and geopolitical influences points towards a potentially tighter oil market. OPEC's role in managing supply, coupled with low global oil inventories and underinvestment in the sector, especially outside the OPEC and U.S. domains, could lead to upward pressure on oil prices. This scenario underscores the need for a balanced approach in managing existing oil resources and transitioning towards alternative energy sources to ensure energy security and economic stability. Now, shale oil is grossly exasperated, and they don't have the slightest clue. And when I say they, I'm talking about the ones that are reporting the news. I mean, God bless these journalists. They don't know anything about the oil and gas industry, yet they're the voice for the world of keeping you up to date and apprised to what's happening in the oil and gas industry. I mean, a shell company like Chevron, they're not going to come out and say, hey guys, guess what? We're dumping a bunch of money in shale, and we're buying in ExxonMobil, they bought a Pioneer, and they're buying out shale companies, and they're producing shale because they don't have anything else. If they had some very big conventional plays, they'd be focusing on that. They don't. Where else are they going to drill? And so if they told the truth about shale, if they told the truth that refining costs are increasing, so their profit margins are declining, the shale wells are not as efficient as they were before, they're not going to come out to the public because their stock price would drop tremendously. They would lose billions of dollars, and they'd lose their position as CEO, CFO, whatever. Okay, so I'm going to go over, Art Berman had an incredible interview recently, and I'm going to go over some of the highlights of that interview, some notes that I took. Okay. Shale oil wells face rapid depletion rates, leading to decreasing productivity over time. Now, this is not a journalist. This is not something that was read on the internet. This is an actual geologist that understands the oil and gas industry, that is unbiased. He isn't the face of a shell company, and he's not trying to pull wool over your eyes to get you to buy more stock. He's simply just stating the facts, okay? And he's been known to be honest even when it hurts, okay? So shale oil wells face rapid depletion rates, leading to decreasing productivity over time. Newer wells are producing significantly less oil over their lifetime compared to earlier wells, marking a trend of diminishing returns. Recent wells are producing 50% less per well than those drilled 3 or 4 years ago, impacting the overall output of the shale industry. Okay. Now, and he also says to break even, a well today needs to produce 300,000, a shale well, I should say, not conventional, unconventional, 300,000 barrels at around $100 per barrel price, factoring in all the operating costs to get a reasonable return. Okay. That's not going to happen very often. Okay. Now, here's what I want you to focus on that Art Berman did so well with this analogy. He uses the large straw and the milkshake analogy. This analogy illustrates that while new shale wells can initially extract oil at a faster rate, like using a larger straw, it doesn't increase the total amount available in the well, leading to quicker depletion. Okay, now here's what you have to understand. Okay, so he's based on his research. Now he read all the data from the earliest wells, 20s, 30s, 40s, 50s, to today's wells. Today's wells are producing 50% less than the previous wells a few years ago. The reason why is because the premium acreage has already been produced. Now they're in tier 2, tier 3 assets, okay? Now, the reason why you're seeing an increase in output of production, okay, multiple reasons, which I will be reading what Eric Nuttall said about it. He gives more understanding to this. He sheds more light on this. But here's one example, okay? You're not getting more oil. You're just able to extract oil out faster, okay? So for instance, if a well can produce 1 million barrels of oil, and you, in years ago, 5 years ago, you might produce 500,000 barrels of oil the first couple years. Now you're producing 800,000 barrels of oil the first year. So that's the analogy. They're sticking a bigger straw in the shake, but there's still, you're not adding more ice cream to the shake. So imagine in this analogy, imagine a couple years ago, the shake is full and they have a medium-sized straw in there. Now today, because of lesser assets, second tier 2 assets, imagine the shake is halfway full now. And imagine that they're, instead of a medium straw, they're putting in a large straw. Well, they're sucking it out faster. And so those numbers are making the EIA salivate and say, hey, look, we surpassed pre-COVID production levels. The shale oil and gas industry, they're the heroes of the world, okay? And so, and that's grossly over-exasperated, and it's making the markets crater. And when I say the markets crater, oil prices, I mean, they're actually doing very well in all with all consideration, okay? Here's another good point. The U.S. hit a new peak in oil production, surpassing 13 million barrels per day, slightly exceeding the pre-COVID peak. That's what everyone is focusing on. But what nobody has realized and noticed, globally, oil production is still below the all-time peak reached at the end of 2018. So although America is producing more oil than they've ever produced before, which is not going to last forever, we're actually producing less oil globally. Okay, so if America's producing 13 million and we peaked at 102 million barrels a day and we're producing 99 million barrels a day today, really, are we producing more oil? No. Now, those numbers are just pulled out of my hat, but I'm not sure the exact numbers 2018 and today. And it's really hard to find data. They're just not going to come out there and tell you exactly what is happening. So I'm going to read Eric Nuttall. Eric Nuttall has been known for very good accuracy when it comes to his data. He's got incredible resources, okay? And with $1 billion fund, they have the capital to spend money on data and the right analyst and the right team to evaluate and find this information, okay? So here's some notes that I took for Eric Nuttall's podcast. Shale oil production has increased more than expected, surpassing initial estimates. Growth in production is largely attributed to private companies, not public operators. So it's key to know that most of this increased production is from private companies, okay? Now, you'll understand why. Private companies ramp up production ahead of sales processes to improve deal attractiveness. So if I had a shell company and was producing 1 million barrels of oil a day, I could go out and increase the pumping. So the pump heads, it pumps the oil out. I could speed up the pump, okay, temporarily to increase output. So I might be able to increase the output by 100 to 200,000 barrels of oil a day, increasing the valuation of my company, and I can sell it, okay? I mean, that's like putting NOS on your lawnmower. Can it run like that for a week? Sure. Can it run like that 2 weeks? Who knows? It might blow up by then. And so oil and gas wells are the same, okay? And so they probably increased the production, sold, and they said, see you later, it's your problem. Okay, so significant transaction, around $100 billion in the U.S. oil sector involving private companies selling to public operators. So over $100 billion worth of transactions in selling private oil companies. So that's a big number. So that's a lot of small shell companies increasing their production, all right? This growth is seen as a one-time and not sustainable, okay? So that's one reason why we saw an increase in oil output, okay? Now, the accounting changes impacting reported production, all right? Now, this is another reason why you see a surge in shale output. Weekly U.S. government statistics showed a sudden surge in production in July due to an accounting change, okay? The change included some natural gas liquids in the definition of oil production. This led to an apparent increase of about 1 million barrels per day in a few months. The adjustment was not real increase in physical production, but a change in reporting methodology. And so bottom line, they changed the definition of oil production. And so in the past, they didn't add in natural gas liquids. Okay. Some natural gas is produced as liquid. Well, now they combined crude oil with natural gas liquids, making it production, okay? So, of course, the output is going to increase, okay? Misrepresentation of data leading to false narratives, public perception influenced by weekly data, which does not reflect close to real-time information, misconception about U.S. shale oil surging due to the way the data was reported. The actual production growth is more modest and not a surge, okay? And so here's the deal. The media is the same guys that push the whole, and I got to be careful what I say, the same media that was weaponized to make you think that you weren't going to survive 2019. And if you read between the lines, what happened in 2019? Okay, the media that made you believe that if you didn't do something, you're going to die, are the same people saying that, hey, listen, we're phasing out fossil fuels. The demand for fossil fuel is dropping, and America has saved the day. We have plenty of production, okay? And the economy is crashing. We're going through a recession. I mean, none of those things happen. I mean, they said they said during COVID, we're going to lose 30 million barrel a day demand. Demand dropped about 10 million because nobody was driving. Everyone stayed home. Nobody was flying. And oil prices crashed, but they came back very quickly. Okay, so Jim Cramer, sometimes I love him, sometimes I hate him, but I really loved his most recent report, okay? In a recent segment, and this is something, a summary that I wrote. In a recent segment, Jim Cramer, the renowned market commenter, and Carly Garner, a highly respected technician and a co-founder of DeCarly Trading, shared their insights on the oil market. Garner, known for her accurate market predictions. Now, this is Jim Cramer speaking on CNBC. Garner, known for her accurate market predictions, including calling the peak in oil prices back in September, believes that the oil market is set to hold above its floor of support, which she identifies as at 68 per barrel. So she believes that we're not going to see anything lower than $68 per barrel. And when she said this, oil prices were bouncing around that price. And now, as you can see, we're at $72 a barrel. This perspective is grounded in her analysts' of the oil market's historical patterns and current trends. Garner's credibility in the market analysts is further bolstered by Cramer, who highlights her successful track record and expertise in commodity trading. Together, their views suggest a bullish outlook for oil, indicating that the market may have reached its lowest point and could be poised for an upward trajectory. Okay. Now, Cramer in the past has been very negative against oil, but all of a sudden he's being positive. Okay. And then you have several other people that, for instance, Buffett backs Occidental's acquisition of Crown Rock by buying more stock. I mean, this guy, do you think he knows something about the markets? He has more analyst data. He has more inside information than you and me times a billion. And here he is buying more of Occidental Petroleum stock. Okay. So I would assume that this guy's putting his money where his mouth is versus saying, hey, I have faith in oil. I think oil prices are going to go up. IEA raises its 2024 oil demand growth forecast. Okay. So the IEA, they increase their growth forecast because they're just getting it wrong. Okay. But that's a good sign. 2024, they expect oil demand growth to be higher than expected. Okay. Energy experts bash John Kerry's United Nations deal to shut down fossil fuels. Now, if you're paying attention to COP28, it's a joke. John Kerry has made millions and millions of dollars speaking engagements for green energy. And these green energy funds have given them millions of dollars to push the whole green energy initiative. And then it's a joke, man. You had these speakers, John Kerry, you had Hillary Clinton speaking, pushing her agenda. I mean, they've made millions and millions of dollars with their fund, and she was pushing her fund. I mean, I just can't believe they allow that woman to even speak. And what she was saying at the COP28 had nothing to do with green energy, and it had to do with women equality, gender craziness, and the effects of global warming on women. I mean, they just make up stuff to seem relevant to the world that they live in. U.S. crude oil stocks seen down by 1.2 million. So they had to extract 1.2 million barrels of oil from the oil savings account because we just simply didn't have enough oil for that moment in time. Hedge funds dismiss OPEC plus action to support oil prices. And so here's the thing. OPEC is pissed. They curbed oil production even more, losing market share to U.S. and other Canada and other oil countries just to see oil prices drop. Okay. What do you think the Middle East is thinking? They're thinking the Western powers are in control of oil prices. And so in the past, if they curb production, oil prices would go up. In the past, if Iran attacks American soldiers, Americans at sea, or oil vessels traveling throughout the Red Sea in the Persian Gulf or whatnot, oil prices would go up. The war in Ukraine, the war in the Middle East, oil prices normally go up, but they haven't. The market is ignoring what's happening in the Middle East. And so what happens when a troublemaker isn't getting the attention that they want? Things only get worse. What happens if you don't discipline a troublemaker? I mean, in my house, if a kid doesn't get disciplined, they become spoiled. And a spoiled kid, do they get better or do they get worse? They get worse. Iran has yet to be corrected. In the past, when we had George W. Bush in office, we dropped bombs in the Middle East. If you attacked us in any way, 9/11, we retaliated in a major way. Okay. But you look at what Iran is doing. You look what Russia is doing. You look at what Hamas and all these proxies from Iran is doing. They're getting away with it. And so what do you think is going to happen if they continue to get away with this? They're only going to get worse, guys. And so I truly believe we are scratching the surface as far as what could be happening in the Middle East. And oil is a global commodity. What happens to oil in the Middle East affects local gas prices. It affects traveling expenses. It affects the price of a barrel of crude. So that price bonus from war and from OPEC, it's not being illustrated in the market today, okay? But I truly believe everything that the Biden administration is doing by controlling the media, by, listen, some of the heads of the largest market funds showed up at this COP28, which is this anti-oil agenda. Okay. They're all in on it, man. Bill Gates was there. Okay. Larry Fink was there. The guy that's over BlackRock was there. There are people that are so deeply embedded in this hierarchy that controls the corporate media, that controls the markets. And so they are so arrogant that they truly believe that they could reinvent energy and replace fossil fuels. Maybe they're not ignorant. Maybe they're just trying to make money. Maybe they just don't care. I mean, if they see an opportunity to put $100 million in their pocket and then a couple of years down the road, everyone find out that he was a fraud, who cares? He's $100 million richer. At that moment, many people lie. Greed causes more people to lie than any other thing. And so they're lying to us. The Biden administration just wants to get reelected. John Kerry just wants to become richer. Hillary Clinton just wants to make more money. I mean, she goes to these speaking engagements talking about, she knows nothing about energy. She knows nothing about climate change, and global warming didn't work, so they call it climate change. John Kerry knows nothing about energy. I mean, they keep building upon this house of cards. They don't have a foundation. They built a foundation on a house of cards, and they keep building upon that. First, it's climate change, and then it's fossil fuels is evil, and we're going to replace it with green energy. I mean, you can't. If we spent trillions of dollars on green energy, only reducing fossil fuel demand by 1%, and it's going to cost us $70 trillion to transition, and nobody's buying the electric cars. Go ask Ford what they think about their electric car inventory that's just sitting there collecting dust. And we're pushing these countries that have nowhere near the financials that America has been blessed with, pushing them to not use the cheapest energy available, which is fossil fuels, and having them skip that process of fossil fuels and go straight to green energy, an energy that doesn't work, that's been proven not to work time and time again. It just blows me away that John Kerry could cruise around in his corporate jet, shaming people and pushing these poor countries into green energy, which is not working in America. But ultimately, it just makes the Biden administration look good. And it makes the Trump administration or the Republicans look just really bad. And look, a guy with the level head's like, look, guys, we're all about protecting our planet. We're all about a better future. But let's be level-headed about this. Today, we need fossil fuels. Let's produce as much oil as we can, keep oil prices low, while we invent the green energy, and let's have a smooth transition. I mean, everyone talks about a soft landing for the feds. Nobody wants a crash. Yet they're willing to just jerk away from a proven energy, an abundant energy that is cheap, to an energy that's not proven, to an energy that's way too expensive, that it doesn't have the combustion that fossil fuels has. And although we have an abundant amount of energy underneath our feet, it's getting more expensive to extract. Although we have abundant energy throughout the entire world, we're not investing enough for tomorrow's future. So we're not going to have enough oil in the coming years to properly, smoothly transition to green energy. And so we're going to have a supply gap maybe in the next 12 months, maybe 2 years. And I think oil prices are going to bounce around $60 to $80 in between now and in summertime. And I think we might have a spike at $100 oil. And I truly believe that OPEC is getting frustrated. Iran is getting frustrated. They're growing. And I think you're going to see something happen in the Middle East. They're going to try to pull something. They couldn't get prices to increase by cutting production. Iran couldn't get oil prices to go up by dropping bombs on Americans and attacking oil vessels. And so I believe that it's pushing them down a road that could cause an escalation, because Putin can't afford for oil prices to drop. If oil prices crater, or if oil prices stay where they are, he might not be able to afford to fund his war. Saudi Arabia can't afford to build the country they want to. Iran, I mean, they make their billions of dollars. They're desperate to keep oil prices higher. They're greedy bastards. They don't care about anyone except for themselves. And so I truly believe that this is going to be an exciting ride for oil, because I truly believe the media has gotten oil wrong. They have underestimated the power of oil. They have grossly underestimated the need for oil, and they have grossly overly estimated the scientists, the green energy experts, and the ability to transition quickly away from fossil fuels. It's going to create a mess, but it's also going to create the perfect storm for the oil and gas industry. And so I'm very excited to be in the oil business because it only makes it more profitable. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in getting involved in oil and gas, we have a new drilling fund. Go in the description below, click on the link, fill out the form, and look forward to chatting with you. Thanks.